Hello everybody, this is Todd Grantham with the Forex Nitty Gritty Insiders. Today we're going to take a look at the concept of price action and compare it to technical indicators and how they work. Now, as new traders, many people will start to look for technical indicators that will get them in and out at the perfect time. The problem with that is that there's nothing that will be a perfect indicator that will get you in at exact bottoms or out at exact tops every single time. And so we need to be able to rely on price action to tell us when those movements are really beginning to move. Now, what I mean by price action is looking for the candlesticks and the price to begin to move out of an area of consolidation and begin to trend either up or down. I'm going to use this example here of the Euro-US dollar. This is a 5-minute chart. And you can see here that we've got an area of resistance at the top here, and we've got an area of support at the bottom here. Now this really is kind of forming a triangle type of a pattern. We've talked about those before. And we can see that we get it to break below that area of consolidation, in this case a support area, on its way lower. In order to trade this, we would have to identify support and resistance, and then we would put our order to short this as it begins to break out of that area and start to move down. The price action in this case is downward momentum. We want to jump into that as it breaks out of that consolidation. So in this case, we may have gotten in at this 133.20 area. This happens to be the time when the FOMC yesterday was making their interest rate announcement, and we can see that the volatility that comes with that is pretty strong. We want to be careful anytime we trade news because we do have the possibility of getting whipped out on both sides of it if we aren't careful. In fact, we probably want to avoid this until we gain some confidence in our trading and really know what our abilities are for our trades. Now this is pretty typical pattern. As it really moves down, we get a little bit of a pullback before it resumes its movement back down here. So this is an example of how we could use price action to tell us now is the time to enter into a trade. Simply waiting for it to break out of that consolidation or out of that price pattern, and then start to look for opportunities to enter into the trade on those breakouts. Now the problem with indicators is that it typically will get us in at a lot worse time because those indicators are generally delayed in giving us our crossovers. One thing that I want to look at here is the idea of a signal happening on the candle. And so I'm going to erase this. And this is a very important point because if we don't watch what's happening, we can get fooled into thinking that an indicator is giving us a signal when in fact it's really not. And let me just show you an example here. I'm going to put onto this just a simple moving average of 10. And I'm going to blow this up. And what you'll see here is that the indicator, even more here, does not go all the way to the end of the candle. The indicator stops at the middle of that candle there. And you can see in this case the wick is coming down and the moving average line stops right at that. If we were to add a stochastic, for example, you can see it does the same thing. At these dashed lines here is where it stops, which is the middle of that candle. And so sometimes it'll look like a signal, especially when we go back and look at past data, but that signal actually occurs. If it occurs after the halfway point, it wasn't a signal on that candle, it was a signal on the next candle. And so we'll look at some examples of that, and we're going to, in fact, go back. We're going to look at yesterday when that announcement happened, which is right here. And I'm going to put onto this, let's say that we were trading just a simple crossover. We'll do a 10 and a 20 here. Change the color to green color. And I'm going to pull that down so we can see this a little bit better. what you'll notice here is that, and this is the big candle down, but I wanted to blow it up so we could see it a little bit. A lot of people will look at this and say that the signal occurred on that candle right there. Crossed over, started moving down. Now, that would be great because that would get us in at a really good time right before it started to move down. The problem is that that candle right there, and I'm going to just put a little line right there so that we can see it better. If we scroll over, here it is right here, we can see that halfway point again. The cross had not occurred. The cross occurred right here, which was on this indicator here. So at the halfway point of this indicator, the crossing had occurred, and that would have given us our signal. Now, the signal doesn't actually become a signal until the candle closes. And so the candle, in this case, we know closed right down here, which is where we would have entered into the trade. Now, if we compare that to price action, we said price action would have gotten us in somewhere here around 133.20. If we compare that to maybe 132.80, which is about where we would have gotten in there, we can see that that's a 40 pip difference in our entries. The first one, we were relying on price action to tell us when to get in. The second, we were relying on an indicator to tell us to get in. The indicator, because of the delayed fashion, is going to make it so that we get in at a worse time. That doesn't always happen. Sometimes indicators will get us in at a great time. But if the price really begins to move fast, it typically is not going to do that. Now, let's take a look at the stochastic, and we can see really the same thing occurred. Again, here's the candle right here. Oops, right in this area here is the candle. Here is our line that indicates the halfway point, and we can see that that crossover here actually occurred on this side of the line, which means that it didn't happen on this candle. Again, it happened on that big candle. And we'd have had the same situation where we'd have entered into that candle there. The reason why I want to bring this up is because as we test out our system and as we practice using different indicators, we need to remember that it's price action that's going to be the most critical thing for us to be successful in the long run, not on the indicators, because the indicators don't always give us the best possible entry point or time to get in. And we can go back and we can look at all kinds of situations and all kinds of time frames to tell us when to get in or when to get out. And we'll see, for the most part, that it doesn't always get us in at the best time. So that's the pound US dollar, or the euro US dollar. Here's the pound US dollar. Now in this case, we have a cross, and this is a live shot. You can see it moving here. We have a crossover, and a lot of people would say, okay, well, that's a signal to get in. Well, it's only a signal once this candle closes. So this candle has to close in order for us to enter into that trade. If we get in before that, then we're really jumping the gun, so to speak, on being able to get in based off of that indicator. Now, here was a cross of the stochastic, which would have gotten us in at a better time. But price action, again, if we look at what price is doing, it's going to tell us pretty much every time when the movement is beginning to happen. And so, if we were to look at the simple trading method, we certainly would have gotten in a lot sooner than waiting for some type of a cross to occur, because we're relying on price action to tell us that it's starting to move up. So that's what we wanted to focus on today. We want to make sure that you understand how the indicators work, when they actually show up, and if we rely on price action, we're going to be a lot better off in the long run than relying strictly on an indicator to tell us when to enter into a trade. So practice with this. Go in and look at the indicators that you use. Make sure that you're evaluating them properly. And remember that the cross doesn't occur until the candle closes. and the cross occurs at the midpoint of that candle. So until tomorrow, everybody, have a great day. Thanks.